Hi everyone, welcome to a very special video. It's Moises, and today I'll be breaking down in detail the best strategy to become a successful trader and make consistent profits every month, every week, and every day, the dream of every trader. I'll take you step by step through my entire process from how to build and frame the trade plan to how to execute it in detail flawlessly. This video is more than my strategy. It's a blueprint that turned me into a profitable trader. So whether you are an aspiring trader, a beginner, or already experienced and you're making money and you're profitable, I am confident that this video will change your life and elevate your trading to new heights. So let's get started. We will start by delving deep into this document that I've put together. It's some key points within the strategy, some steps that I want you to understand and realize truly, because once you truly understand this, you only need to go into the chart and apply it. So we'll focus first on understanding all the concepts, and then we'll go see some examples. I have one plan example, and then if we have time, if the video is not going too long, I'm gonna analyze the market live and predicting where DXY is gonna go for the next week. So you can see what I do every weekend, how I plan everything, how I apply these concepts live. So let's begin with the steps. The first of all is seasonal tendencies. That is, timing is everything. And seasonal tendencies will tell you the answer to all the questions that people ask. Oh, should I hold this trade? When should I take profit? What if I take profit and price continues higher? Is my target gonna get reached? All these are answered here. And you may wonder, what are seasonal tendencies? What is this? It's basically I have it here on this document that from my mentorship. It's all the tendencies from every asset class. You can find them on Google, just typing. You can type Euro USD, gold seasonal tendency. You have here we're working on the Forex ones, but this is just for you to understand the example. And it's a 33-year, 15-year seasonal tendency. So what has the market done on average during those months? You see we have here February, March, April. Every monthly candle, you can imagine these as candles. And this helps you predict what are you going to be expecting during that period. So for example, here on March, we've been forming a top for the past 40 years and for the past 15 years. You can see that the lines are lining up pretty well. We form a top at the beginning of March and we decline towards May. And not only that, but if you look at the EU, that they're opposite assets, right? If you're trading Euro USD, you're going to be looking at both charts. And look what happens here as well. At the beginning of March, we form a bottom and we rally towards the end of May. And then we form a top. Just by having this information, it gives you such an edge against everyone. And to understand what's coming next, you just open the chart, you look at this and you say, okay, we're in March. So I'm going to be looking for a top. You have already some kind of bias to work on. And then based on this, you look at what's happening right now. But obviously, putting more importance on what's going on. This is just a reference. And just because it's a tendency, it's not a guarantee. It doesn't mean that it's going to happen every year. It's a reference for you. And for example, if you also want to just focus on the main points, on the big swings that are obvious, that are screaming to you. You see now here at the beginning of the year, there's nothing really, right? We're just kind of ranging, so I don't have anything to work on. So, I'll just ignore seasonal tendencies right here. That's where we are right now. And let's continue for the next point. That is building your higher time frame plan and bias. So once we have understood where are we on the chart based on seasonal tendencies, you want to build a plan of where is the next monthly candle going to expand to. And the best way to do that is by realizing and understanding that every candle is a range. And every range can be truly broken or falsely broken. And just knowing this, you will always know where price is going. So, where will this month expand to? Are you expecting a bullish or a bearish month? How will the candle look like if you're looking for an open, high, low, and close? That is a bearish monthly candle, an expansion to the downside. Where do you expect the high to be made? Which week of the month do you expect that to happen? Right, this will form the foundation of your bias and narrative. Now, once all this is established, we're moving to point 3. So, based on the higher time frame plan, frame your trading plan for the week, day, or 4-hour candle. So why do I mention this? Because regardless of the trade you're taking, they're all correlated. So it can be a day trade, it can be a weekly range, you can be trading the daily range. But all the concepts is in the same way. This is something I want you to internalize. Why is that? Because price is fractal. Meaning the same principles apply to all time frames. They're just happening at a different speed. Right? It takes 7 days or 5 trading days to print a weekly candle. It takes just 4 1-hour candles to print a 4-hour candle. So it's the same concepts are happening across all time frames in the 1 minute from the 1 month. It's just the speed that they're happening. So from here, you frame your expectation by asking, where will this week expand to? So if I'm bullish for the month, I'm going to be thinking, okay, which week of the month are we? What am I expecting for this week based on the monthly candle? Where will today's daily candle expand to based on the weekly candle of my expectation from the month as well, right? Where you're combining, you're putting all together. You're putting all together in an harmonious sequence. Just like in life, if you see someone that takes care of their skin, that eats healthy, that goes to the gym, they look good, right? So the same is happening here. Everything is falling into a direction. Everything is telling you something. Then what's happening with the 4-hour candles? How is the 4-hour candles related to the daily, to the weekly? And here I had a note that says, why do I mention 4-hour candles? Well, you can observe the 4-hour candles and the kill zones from ICT. This is for the ICT community. Observe that and study what's going on. You'll see pretty interesting coincidences. Everything is interconnected. Master this and you master the market. I would say this is one of the most important points, point 3, and also one of the hardest to grasp. It takes experience, practice, hours in front of the chart, confidence. You gain all this by experience. That is backtesting, live trading. That's how you gain all of this. 4, you identify the higher time frame key levels. So now you have your plan. You know what's going on. You know what's happening next. Now you identify the higher time frame key levels. Once you have your higher time frame plan bias, identify the higher time frame key level. That can be daily FBG, a key candle, a higher time frame breaker, a weekly fair value gap. These will be are my favorites, and then you can refine them on the 4 hour as well. So for the higher time frame key level, about the 50% of the price leg or range that you're trading, if you are bearish, that is expecting lower prices. And if you're bullish, you'll be looking for a key level that is below the 50% of the price leg or range that you're trading. That is premium and discount, right? For those that want to use more fancy terms, but you just say above or below the 50% level of the range that you're looking. Then the higher time frame key levels, you want to combine them with a lower time frame liquidity pool. And you'll see that every higher time frame fair value gap is a lower time frame liquidity pool. Just open a chart right now and you will see it. But you always want to, this is essential. And even if you are picking the right higher time frame key levels, there will always have a lower time frame liquidity pool. So it's not too hard to find this. It's not like you have to force it, you know? When you're forcing a trade, those are the worst trades normally. Timing is crucial. So the key level should align with the expected time of the high or the low, right? This is the importance of time, and it's also correlated with this. Again, every candle is a range. You're always trading within a range. So understanding where you are within that range is essential. Are you at the 50%? Are you above the 50%? Did you do a false breakout of the low of that range or candle? Think about that. 5. Lower time frame confirmation for entry. So this, once you have the plan, once you have the key levels, what do you need? Are you just gonna enter when price hits your key level? No. You wanna wait and see. You want to wait for the market makers, for smart money to tell you, yes, we want higher prices, we want lower prices, or no. Wait, we're gonna make a low, we're gonna have a false move, we're gonna take everyone out, and once everyone is out of the move, once everyone who wanted to trade that key level is out, now we're getting the real move. That's why you need the lower time frame confirmations to understand what's going on in the lower time frames based on all the plan that you have. For me, I use the key candle. That will be the initial signal that the low is forming or the high. And then the confirmation of the KC will be the breaker, also known as a real market structure shift. So I would say also never marry one time frame. Right? You always want to be. I see a lot of people that say, "Oh, I just use for my lower time frame confirmation. I just use the 1 minute, 3 minute, 30 minute, the 15, and they're married to that." No, you need to be switching and understanding what's going on, because maybe you see a swing high forming or a false breakout of the range or candle on the 4 hour. And that is aligning with a 5 minute key candle. That is huge. You know, so you need to be combining all of this, and these are my favorite time frames. These are all the ones I use. I don't use anything else. So you can save them. This is the 1 minute, and I say advanced because the 1 minute can fool a lot of people. The 1 minute needs to only be used in accordance to the 15 5 minute and what's going on these ones. You need to be careful right here. It's within the context. Just because you have a 1 minute market structure shift, as many people are trading, doesn't mean that it's real. You need to be aware of the 5 and 15. And the more time frames align, the stronger the trade. That is obvious because of the harmonious sequence that I told you here. Lastly, the sixth point is before entering the trade, you need to have some things that are essential and always clear. You need to have a real invalidation. And as I said on my last video, your invalidation is not just a random swing high or low that you find in the chart and that fits well with your risk management because you want to have a huge position size. No, it is the invalidation of your plan. It is the real invalidation that if that is broken, okay, I will reassess and look again for my plan. Maybe my plan is not invalidated, but that trade idea is. That will be your invalidation. That will be your stop loss. You need a target. What are you trading? Are you trading the weekly range, the 4-hour candle, the day? Or what are you doing, What is your target? Are there potential places that price can reverse and I might consider hedging? I might consider taking a partial or maybe closing my trade entirely if I see something I don't like. Entry trigger, that is basically your plan. What do I want to see for me to enter that trade? And lastly, and most important, is risk management. Here I will tell you, you can watch my video I did on risk management, but the essentials is never risk more than 1%. Look for asymmetric risk, there is minimum a 1 to 2. The more the better, right? But minimum 1 to 2. Another example, if you're trading with a 200k account, maximum risk 2,000 per trade, that is 1%. You don't need to have a huge position size to make a lot of money. Truly, Roman, one of my best friends, he's one of the best traders I know. In the past month, he made $40,000. And he always have small position sizes with a wide stop loss, but he's always right on the direction of the market. So he's always getting huge moves. This to show you that you don't need to have 50 lots on a trade and risk your whole account to try to make 20,000. You can make 20,000 risking 2,000. And you will probably sleep better at night. This is how you protect your capital while letting your winners run. And last note for those that want to get rich quick, mastering this strategy won't happen overnight. It takes discipline, patience, and relentless practice. But once you master it, you'll have an edge that almost no one else has. You'll be following the footprints of the market makers. You will truly understand what's happening at all times. You will never be lost. And not only that, but you will be able to trade any market. I would like to say here as well that how can you practice, how can you become a master? You can use FX replay to backtest or analyze live. Spend hours on the chart analyzing live. Open it every week on New York, on London, and observe. Try to do it. Right? If you're learning to play tennis, you don't watch your coach play. You go and you play yourself. So open a demo account, a 200k account with FTMO. Try to see if you can pass a challenge. Take action. Don't just be here sitting down, taking notes. Go in the charts and do it. And then you will start to see things. You will start to see, oh, I don't know what I'm doing. But then that's how you can improve. You don't want to remain ignorant. So this is all. I hope you understand it properly. Seasonal tendencies, the higher time frame plan and bias, that is on the monthly. Your trading plan on the weekly, day, 4-hour range, depending on what you're trading based on this. Then identifying the higher time frame key levels, lower time frame confirmation for entry, and everything you need before you enter the trade. Let's move on to the example now. And this is an example from last week. And I picked this on purpose because it's not an easy trade. Because we had SMT. It's this move right here that we have. This move. This. And this is a move that my student Devarsh, he got last week, and with this trade he made $20,000. He also took some trades on Monday, I believe. So in total he made a $30,000 week. I have the clip right here. Because Devarsh, on the last live you said that you made 9K, but that was wrong. He made 18K because it was 200K account. Even if it's demo, this is incredible results. And I want Devers to explain your routine, and also for you to review these trades of this week that was 30K, right? 30,000.
Yeah.
So, salvaging around.
Bro, 30K in a week, and that's USD as well. So if you're converting that to Australian dollars, that's like 80K. Or like, it's like, I don't know, like 78K.
A year's salary.
That's more than a yearly salary, bro, of mine.
That's insane.
In a single week. That was crazy.
That's so crazy.
Yeah, I would go for a chat.
Yeah, that's beautiful to see. It was amazing. He made 18K the other week, and then 30K the other, and this week he's in drawdown. He texted me. But now let's focus now on the example. Let's put the replay bar, and let's do all the steps according to the document so we can understand it properly. So we're gonna start the week. You see here we are on Monday 10th of February, Tuesday. We're gonna let Monday play out, and we're gonna go to Tuesday. Now, what is going on the month? And here in this case, whenever I'm trading Euro, I'm always looking at DXY, GBP, Euro. I'm always looking at this. I have here some things drawn. But this to show you my main bias was determined by DXY. It's a long story, my bias, but first, what is the first step? Well, seasonal tendencies. So let's see the seasonal tendency of DXY and EU. We saw it earlier. We're on 10th of February, where we teleported. You see, there's nothing. So we have nothing to work with. Here it's kind of going down, but it's just ranging. We don't have a major swing. I told you, focus on the major swings that are happening. So we don't really have anything to work on. Let's move on now to the monthly. Where do you expect the monthly candle to go? And here on the XY, I had it pretty obvious. Here now you have the prediction, because TradingView will always, it makes you a spoiler always when you switch the time frame. You see, we're here at 108, and now I put the monthly, and it shows me where we are today. So we cannot avoid that. But it happened exactly what I was expecting. Is what I was telling you. Every candle is a range. Let me save all this so it's not annoying for us. So I have my target right here. Why is this target? From the low that we made last year to the current high, there is the 50% of the price leg. It's also a monthly FVG. And let me show you what I told you earlier. A higher time frame FVG is a lower time frame liquidity pool. And now what else do we have? Well, the previous month of January, we closed inside this range. So then I was expecting the month to do open, make a high, expand, make a low, and close. That is a bearish candle, which is exactly what happened. And there is something that is essential here before we reach the target, and that is we need to flip previous month low. Not just because it's previous month low, but because it's the 50% of this range that we close inside of, you see? Therefore, we should break this truly to continue to the target. Now, just knowing this, I have my entire plan for the month. I know exactly where to expect the candle to go. So we have our step 2 done. I'm expecting a bearish month on DXY. What does that mean? Bullish month on EU. Now build your trading plan. So let's observe what was happening on the weekly chart. Here we finish January, we open February, and we get a rally, make a high, and close back inside. Observe this. Observe the candles, right? We take this, right? Bullish, take this, close back inside the range, but most importantly, we close back inside this candles range. Therefore, then I'm expecting the low to be taken. And what is this low aligning with? That is what it's the line we have. That's previous month low. Previous month low, which is also the 50% of the monthly candle range. So very critical level. So observing this for this week, which we already have it here, right? As I said, it's a spoiler. I'm looking for a bearish candle to here. That is what we got. Now within the week, if I'm expecting a bullish week for EU and bearish for DXY, what will I be looking? Well, I'm looking for Monday, Tuesday, Wednesday, mainly Monday and Tuesday has an 80% chance of forming the high of the week or low. In this case, since I'm looking for a bearish week on DXY, I'll be looking for Tuesday to make the high. So framing all this, now I will frame my whole weekly plan and my day trades, my 4-hour range trades, it all will be based on this. So let's continue observing what happened. On this case, we'll let Monday play out. You can watch the video, I can attach it here, of how to trade on Mondays because it's very specific kind of trading. It's usually a ranging day. So how do you trade a ranging day? There's a specific way to do it. The main idea for step number 3, I'll be looking for Tuesday, I'll be looking for a Monday range play, and Tuesday to make the low of the week, to then expand towards the target. Same here, right? Let Monday take all these highs and then have the drop towards the low. Now, what will be the key level? That's step 4. What higher time frame key levels will I expect this high to be made? And here in EU, what is the main key level? Here it was a little bit tricky because we don't really have an obvious key level, right? We open with this gap down on Monday, taking Friday's range low. So there's not really anything that you can work with that it's too special. The only thing we have is here. This is the low of Friday. If we go to the daily, see the Friday low. Now you want to be looking at the 4-hour. Are we breaking the low truly? And what is this candle that we have right here? Ignore the gaps you ignore them. What is this candle? This is a key candle. So you can use this candle as a key candle, and that can be your higher time frame key level. So that will be 4KC, 4-hour key candle. You can observe as well that from this low to the high, we are below the 50% of the price leg, right? And this candle is the one that digs into the 50%, and now we're at a critical point. If we don't break this range falsely and form the low around here, we're likely to continue expanding lower and take these lows. So this is an important place on the chart. And similar on the XY, right? We haven't hit the 50% yet. But the important here is that we're playing Monday range. So that's the main key level we have, is observing Monday range and what's happening. Now do not forget, we have the higher time frame key level, but we want to combine it with a lower time frame liquidity pool. And then ideally, you want everything to happen at the right time. However, the time sometimes, if you're too perfectionist like myself, time sometimes it can fool you. You can be waiting always for the right time, and in 90% of the cases, all happens at the right time. But sometimes, if the market makers are telling you that the low is in and that low wasn't made at the right time, you need to go with it. You cannot be there like, oh, shit, it didn't happen at the time I wanted. But no, you gotta adapt to the market and follow their footsteps. There is something too important, because some people, they get obsessed. They want everything to be perfect. And one thing that is certain in trading is that nothing will ever be perfect. Not just in trading, in life, in anything in life, nothing will ever be perfect. You can see here, right, that this is not perfect. There are some, see, it's not a straight line. I see it and it hurts my eyes, but I did it quickly for the video, so I couldn't do it as perfect. But this is just an example that nothing will ever be perfect. So we need to keep that in mind. Now, lower time frame liquidity. What could it be? Right here. And what is this happening? Oh, this liquidity is also below the 50%, and I'm bullish. So we can keep it in mind. We dig into the liquidity. What is this? There's a key candle. If you go to the 1 hour, remember the time frame correlation. See, close of the candle that digs into the key level. KC. We can go to the 5 minutes as well. What is the 1 hour KC? You can put it here, but this is a 5-minute breaker. But here mainly, you want to be looking at this high to be broken. So now we have the 1 hour KC confirmed. This is the first sign that the low is in. You could buy right here with stop loss at the low. But the main confirmation that the low is in will be breaking truly this high. Let's see what's going to happen. We bounce from the KC. First candle. Okay, it's a good close, but then look at the second candle. Close back into the range, and now we're going to take the low. Now you wait. Here, true breakout, right? If you're playing it safe, right? I normally enter at the KC, but if you're playing it safe, you could wait for all this. You enter here, and you could have your stop loss at this low. And you pretty much have the same position size that if you enter here with stop loss here, remember that the target is quite high. It's not, we haven't talked about that yet, like analyze it, but the target is mainly on the XY. We're targeting the previous month low. and the 50% of the range. So that is a huge trade. And here is similar, right? We're targeting based on DXY here in EU. That's what I was doing. But here's to show you that even if you wait, and you may think, oh, that's a shitty entry. Right? Let's say that you enter in the KC and you have your stop loss. No, let's say you enter here after the KC is formed, and you have your stop loss at the low. There is 13 pips, and here it's 12. Okay, this to show you that just because you don't have a perfect entry doesn't mean that the trade is not good. This is a great trade. Why? Because my target is up there. Now here there's something important happening that you can study by yourself, because I don't want to go too in depth in the video. But you see that this low is made on Monday night, and usually you want Tuesday to take the Monday low, that is Monday range. However, on this case we have SMT. You can look at GBP, you see? This is Monday, this is Tuesday. We take the low, you see the form is very similar. Breaker, KC, close of the KC, close of the breaker. 1 hour breaker right here, confirm. Monday low, taken, DXY, Monday high. Not yet here. You see, Monday taken. So, EU, Monday low, not taken. That's SMT, right? You take it on the correlated assets, not here. What does it mean? That EU is strong, the market makers are accumulating and are refusing to send price below the low. After this, well, one target you can keep in mind is this candle range. You can be aware of the 50%. And then you want to break the high truly. And then the main target you can have is here, just like in DXY. Previous month high, you need to be aware of it. And then there's a monthly FBG lining with the 50% of the price leg. It's this one right here. That is the target. Mainly on this case, since DXY is much cleaner, right? You can see it much better here what's going on. I will be monitoring my trade based on DXY. You know, you're just switching at all times, seeing the correlation between the markets. That's so important, and very little people do it. It surprises me. But yeah, we are in now. Invalidation. If we enter here, you can put your stop loss here, because why? Why is this my invalidation? Because once the breaker is created, if I'm right and this is the low, price should expand. And if we have a retracement, I want it to be a quick retracement to touch the breaker, hold the 50% surely, and expand. I don't want price to stay here ranging and chopping around, and then I'm gonna likely get stopped if that happens. That's why if I enter here, where we said it's not a good entry, the bearish had a great entry after the KC around here. That is my invalidation. That was the sixth step. Before entering the trade, the real invalidation, your target, your entry trigger, and risk management. If we are entering up here, after this candle breaks and creates the breaker, and we put our stop loss at this low, that is 13 pips. That can be, if I'm trading with a 200k account, that can be a nearly 20 lots, a little bit less, but we can say just 20 lots, right? More or less, risking $2,000. That is 1%. Here I'm risking a little bit more. That will be like $2,300 probably I'm risking. And we did it. Expand slowly. That is New York. Then, right, remember I explained here the lower time frame confirmation that I didn't mention the step 5, but that's what we did with the KC and the breaker. That's what we just did. And one last point that I didn't mention is while you are in the trade. So that could be added in step 6. And that is once you are in the trade, what do? Do you just sit back, take a nap, you forget about it? You could do that, that it's not a bad option if you get too emotional, but I always recommend to monitor the trade live. So what's going on? What's going on with the order flow? And you monitor it objectively. You're seeing, okay, is price going what I'm expecting it to go? Is it doing what I'm expecting it to do? Are the market makers on my side? Are the market makers wanting higher prices? Now let's say we take this high. Boom, we take the high. Once we take the high, I wonder, are the market makers wanting higher prices? What are the market makers doing? And they tell me. And then I can monitor the trade live, observe it, and act accordingly to what's happening. That will be monitoring order flow, monitoring the trade, and that can be added here at the bottom. Step 7 or on 6, you could add monitor trade live. And as new information is provided to you, act accordingly. And well, I think that was so long, but so valuable and deep. I don't think we have time to do the DXY analysis I wanted to do, but you pretty much know it, right? We're breaking this low truly, and I'm expecting this to hit, likely next week to expand. Let's get out of the replay. I can show you quickly what I'm expecting. But we have this, we have a daily FBG here. If we flip this, we have this right here. That's the main thing. Right? If we don't hold this daily FBG, I mean, if we don't reject it, we'll do this. And then continue to the downside, I believe. So yeah, this is the plan. And obviously this plan, I make it all based on this that I show you here. This is a blueprint. Seasonal tendencies, monthly bias, the expectation for the weekly day for our candle, depending on what you're trading, higher time frame key level, lower time frame liquidity pool, lower time frame confirmation for the entry, clear invalidation target, entry trigger risk management, and monitoring the trade as new information is provided to me once I am in the trade. This all that will make you succeed if you are willing to do work. This is all you need, you don't need more. I've given you everything. Obviously, not in full detail, right? That's why I have my mentorship. But I've given you more than enough for you to work and to try to understand. This is life-changing if you truly grasp it. I'm serious. And before we end, these beautiful words from James Allen. He who knows that love is at the heart of all things and has realized the all-sufficient power of that love has no room in his heart for condemnation. Men, not knowing this love, constitute themselves judge and executioner of their fellows, forgetting that there is the eternal judge that is God, an executioner. And insofar as men deviate from them in their own views, right? People that have different views than yours, their particular reforms and methods, they brand them as fanatical, unbalanced, lacking judgment, sincerity, and honesty. Insofar as others approximate to their own standard, do they look upon them as being everything that is admirable? Such are the men who are centered in self. But he whose heart is centered in the supreme love does not so brand and classify men, does not seek to convert men to his own views, not to convince them of the superiority of his methods. Knowing the law of love, he lives it and maintains the same calm attitude of mind and sweetness of heart towards all. The debased and the virtuous, the foolish and the wise, the learned and the unlearned, the selfish and the unselfish, receive alike the benediction of his tranquil thought. You can only attain to this supreme knowledge, this divine love, by omitting endeavor in self-discipline, and by gaining victory after victory over yourself. Only the pure in heart see God. And when your heart is sufficiently purified, you will enter into the new birth. And the love that does not die, nor change, nor end in pain and sorrow, will be awakened within you, and you will be at peace. He who strives for the attainment of divine love is ever seeking to overcome the spirit of condemnation, of judgment, of dislike, of hatred. For where there is pure spiritual knowledge, condemnation cannot exist, and only in the heart that has become incapable of condemnation is love perfect and fully realized. That is the love of Jesus Christ. Blessed are the poor in spirit, for theirs is the kingdom of heaven. Blessed are those who mourn, for they shall be comforted. Blessed are the meek, for they shall inherit the earth. Blessed are those who hunger and thirst for righteousness, for they shall be filled. Blessed are the merciful, for they shall obtain mercy. Blessed are the pure in heart, for they shall see God. Blessed are the peacemakers, for they shall be called sons of God. Blessed are those who are persecuted for righteousness' sake, for theirs is the kingdom of heaven. Blessed are you when they revile you and persecute you and say all kinds of evil against you falsely for my sake. Rejoice and be exceedingly glad, for great is your reward in heaven. For so they persecuted the prophets who were before you. And I don't know where I just read this, but it reminded me when I was reading the text, it reminded me of this. It's some of my favorite passages of the Sermon on the Mount. But yeah, I really hope you enjoyed the video and that you found the value. Remember that you can join the Discord. I highly recommend you to start the 75-day challenge. Today for me is day 3. Yesterday was day 2 here. Took this trade on Euro, the quick scalp. playing golf a little bit. It's my 7th lesson. I haven't played since October, so don't judge my swing. But yeah, day 1 here you have all the things I do. I highly recommend you to start doing this. It's been amazing. Devar's failing day 26. And yeah, best Discord community in the world. All the amazing people. I'm so grateful for everyone that is inside and everyone who is participating. And remember that you can join my mentorship. You can read about myself, about my values here on my website. You can read about the mentorship in detail in here. I'm confident I have the best mentorship in the industry. And you cannot truly understand how good it is from the outside. Like this is an overview from the outside, but you can only grasp how good it is, why it is the best mentorship in the industry, once you see it from the inside, once you are there on every live, every weekend. We do 5 hours every weekend, 5 to 6 hours, and it's truly incredible. I'm changing lives, and I'm so grateful for everyone who put the faith on me, everyone who has been since the beginning. We've done 25 lives so far, and we're just getting started. We're going to continue for the whole year and more. So it is truly incredible. I'm very grateful. And I want to say thank you to you that you are watching the video. This was a pretty long video and very valuable, and I hope you rewatch it as many times as you need. I hope you can internalize all the information and that it helps you improve, that it helps you become a better trader, it helps you become profitable. And yeah, you can read all this. You can text me if you want to be in. And thank you very much. I wish you an incredible week, a great trading week ahead now of the end of February. And for the upcoming year, we're going to keep doing great. So God bless you. I'll see you all very soon. Bye bye.